Palantir Technologies, which trades on the Nasdaq exchange under the ticker symbol PLTR, has once again captured the attention of investors across the market. After delivering spectacular gains in the year 2024, the company continues to perform exceptionally well in 2025. However, like most high-growth technology stocks, Palantir's share price has not been immune to volatility. The recent fluctuations have been caused by a combination of macroeconomic concerns and company-specific developments that have temporarily shaken investor confidence. To begin with, Palantir stock experienced a decline last month following reports that potential tariffs could soon be placed on semiconductor imports. This is significant because Palantir's artificial intelligence software products rely heavily on advanced semiconductors to perform complex data inference tasks. If tariffs are imposed, the company may be forced to pay higher costs for the semiconductor components required to deliver its artificial intelligence-driven solutions. Increased component costs could temporarily squeeze Palantir's profit margins, which would naturally concern investors who are already cautious about the stock's elevated valuation. Adding to this concern, Reuters published information from an internal memo written by the United States Army. This document mentioned flaws in the battlefield communications network that Palantir is currently helping to build and maintain. Because Palantir's reputation has been built on providing dependable data and defense software to high-profile clients, including the United States government, any mention of defects or inefficiencies in such a critical system can cause anxiety among investors. The reaction to this memo was immediate because Palantir is a company that operates under intense scrutiny due to its high valuation. Its stock price has long reflected expectations of near-perfect execution and continued growth. Therefore, even small missteps or hints of operational weakness can lead to significant short-term declines. Investors understand that Palantir cannot afford to make mistakes if it wishes to sustain the incredible growth momentum that has defined its recent years. However, not everything surrounding the company has been negative. In fact, many analysts and investors remain optimistic that Palantir will soon deliver results that could reignite enthusiasm for the stock. One key upcoming event that could serve as a positive catalyst is the release of its Q3 earnings report, scheduled for November 3rd. Historically, Palantir's financial reports have acted as strong triggers for stock price movements because they often include surprises on both revenue and earnings. For instance, during the month of August, when Palantir released its Q2 results, the company's share price surged. Earlier in the same year, several strong earnings reports also strengthened investor confidence and reinforced the belief that Palantir's growth story remains intact. Therefore, many market watchers are once again anticipating that the upcoming earnings release could provide the next spark for the company's stock price. It is important to note that Palantir's management has already addressed the concerns raised by the United States Army. The company confirmed that the issues identified in the communications network were discovered early and promptly fixed. This reassurance has helped calm some of the market's initial worries. Beyond addressing these short-term issues, Palantir's long-term fundamentals continue to look very encouraging. The company's demand environment remains strong, with both existing and new customers showing enthusiasm for its artificial intelligence software platform. Palantir's commercial partnerships have been expanding rapidly, and its government contracts continue to provide reliable sources of recurring revenue. A recent example of this positive momentum is the company's new partnership with the government of the United Kingdom. Through this collaboration, Palantir could invest up to $1.8 billion in the country's defense sector. This agreement not only opens new opportunities for revenue, but also strengthens Palantir's global reputation as a trusted provider of artificial intelligence and defense-related technologies. Entering the United Kingdom's defense market could prove to be a major milestone, potentially unlocking a steady stream of new business over the coming years. These developments suggest that Palantir is well positioned to outperform expectations once again. Over the past 4 consecutive quarters, the company has consistently beaten Wall Street's earnings estimates. This pattern has been fueled by increased spending from long-term customers, new client acquisitions, and ongoing contract expansions. The results of this success are clearly visible in the company's financial statements. During Q2, Palantir reported a 48% year-over-year increase in revenue, reaching $1 billion. Additionally, the company signed new contracts valued at $2.3 billion. This figure represented a 65% jump in the total value of its remaining unfulfilled contracts, which climbed to $7.1 billion. Such a large and growing backlog indicates that Palantir's revenue pipeline is expanding at an even faster pace than its actual reported revenue. This means the company has a strong base of future business that can support sustained growth. As investors know, a growing pipeline often translates into higher future earnings, provided that the company can efficiently convert those contracts into revenue. Moreover, the strength of Palantir's revenue pipeline has directly contributed to its rapid earnings growth. In quarter 2, the company's adjusted earnings increased by 77% compared to the same period in the previous year, reaching 16 cents per share. Its operating margin also improved significantly, standing at 45% during the first half of 2025, up by 9 percentage points from the year before. These improvements indicate that Palantir's profitability is strengthening, which is especially important for a company that trades at a very high valuation. While some investors remain cautious due to Palantir's lofty forward price-to-earnings ratio of 217, the company continues to justify this premium through accelerating earnings growth, consistent revenue beats, and expanding customer relationships. Even though some analysts view this valuation as excessive, the company's recent financial performance shows that it is capable of sustaining this growth trajectory. As long as Palantir continues to deliver strong financial results and improve its profit margins, the stock could continue to command investor confidence. Looking ahead, the future for Palantir appears very promising. The global artificial intelligence software platform market is expanding rapidly, and Palantir has positioned itself as a major player in this space. The company's expertise in data analytics, machine learning, and defense-related artificial intelligence systems gives it a competitive edge that very few companies can match. Over the next decade, this market is expected to grow by hundreds of billions of dollars, and Palantir is likely to benefit greatly from this expansion. As more governments and private enterprises look for ways to harness artificial intelligence to improve decision-making and operational efficiency, Palantir's technology could become even more valuable. Investors who believe in the long-term potential of artificial intelligence should view Palantir as a company that could continue to deliver substantial returns. The firm has demonstrated resilience, innovation, and adaptability in a highly competitive industry. Its consistent ability to secure high-value contracts, deliver new products, and expand into new regions provides further evidence that its growth story is still unfolding. While short-term volatility may continue as markets react to news about tariffs or military contracts, the bigger picture remains positive. The combination of strong demand, improving profitability, and a growing global presence positions Palantir to maintain its momentum for years to come. Therefore, if you already hold Palantir shares, staying invested may prove beneficial, especially with another earnings report on the horizon. A solid performance in the upcoming quarter could easily push the stock higher once again and further solidify investor trust in the company's ability to deliver sustained growth. Essentially, Palantir Technologies, which trades under the ticker symbol PLTR on the Nasdaq exchange, continues to perform strongly in 2025 following its impressive gains in 2024, even though the stock has experienced short-term volatility due to concerns about possible semiconductor tariffs and a United States Army memo highlighting flaws in a defense network it developed. Despite these issues, Palantir remains in a strong position as it prepares to release its quarter 3 earnings report on November 3rd, which has the potential to drive the stock higher once again. The company has consistently exceeded Wall Street's expectations for 4 consecutive quarters, supported by strong customer expansion and new contracts, including a recent one with the United Kingdom government worth up to $1.8 billion. Palantir's quarter 2 revenue grew by 48% year over year to $1 billion, and its adjusted earnings rose by 77% to 16 cents per share, with its operating margin improving to 45%. Even though the stock's forward price-to-earnings ratio of 217 reflects a rich valuation, Palantir continues to justify this through accelerating growth, expanding customer partnerships, and an increasing backlog of $7.1 billion in unfulfilled contracts, which strengthens its position as a leading player in the artificial intelligence software platform market and signals potential for continued long-term success. With that being said, I will see you in the next video.